and we'll invite Jeffrey up. So Jeffrey Barraclough, could you come up, please? So your panel is on evolving payment systems, cross-border and domestic innovations. As we said, £3.3 trillion worth globally of cross-border e-commerce, but there's a lot of navigation to be had. So what do you aim to get out of this panel today? What would you like the audience to know?
Well, to be informed and entertained would be good, wouldn't it?
What more could one ask for? So anyway, the rest of the panel are still... would you like to come up?
Yeah, sure.
Yeah, if we get the rest of the panel up. Have you got microphones? You're all geared up to go. So we're looking forward to this session.
Come on down. Welcome, everybody. I might sit over here to put some distance between myself and the panel. So my name's Jeff. I write a Substack called Business of Payments, which covers the payment industry from a vendor side. So if you want to know who's making money and how they're making money, read Business of Payments every month. But I also take a keen interest in the scene internationally, globally, and particularly around Europe. I'm delighted to have this panel with me. So what I'd like to do is if you can each give me a quick personal intro, who you are, what your business does, and one challenge you see, one big challenge you see right now in global cross-border payments. So I'll start with Blessed.
Hi. My name is Blessed Yahaya. I work as a strategic partnership development manager for Google for payment. I'm going to make a joke and say, should I tell you what Google does? But I think first of all, no, Google's products span across, there's a search engine, there's the cloud, right? I'll just go ahead and give a brief detail of what I do. Essentially, Google has a payment platform, right, which supports payments upon all of our products. So if you want to pay for your Google Cloud subscription as a business, or you want to pay for YouTube Premium, right, we have a payment infrastructure that supports all of Google's products. So that's Google as a merchant. In terms of what we see as the biggest challenge, right, I think one of the biggest challenges that we see from a payment perspective is transparency, right? It's like how exactly do you try to achieve that global reach, but maintain local acceptance?
Excellent, thank you.
Hi again.
Augustin.
I was here being the local for almost 7 years, Uruguayan, as I said. So I'm looking after new business in EMEA. And biggest challenge, I think, is like keep up to date and making sure we are delivering for our merchants. They might have many concerns on how we do it, but maybe having all the alternative methods, local methods, driving conversion, making sure everything runs smoothly.
Well, we'll come back to that in a moment. But
Well, thank you. My name is Adam. I work for ePay, one of the sponsors today, payments orchestration platform. My role is enterprise sales, so like Agustin, new logo. And in terms of challenges, actually, I see only opportunities.
That takes me back. I used to work for a company that had this mantra: there were no problems, only opportunities. And the sales guys would come off the road with a broken laptop and say, I've got an opportunity with my laptop. But I love the positivity. Paul.
Yeah, afternoon everybody. So I'm Paul Bedford. I work in the Bank of England's Payments Directorate. That's the part of the bank that runs the RTGS service for the UK. So I lead the policy development function. So among other things, that includes leading the bank's contribution to international work on improving cross-border payments. And my key challenge, and I think Blessed pinpoints transparency, that's definitely part of it. I think the consequence of that is a lack of competition. So if you compare domestic markets to the cross-border payments market, competition is still not where it should be.
Excellent. So we've got a lot to chew on. So Augustine, let's start with you. So how are merchants dealing with all this complexity, localizing payment methods, FX and tax, while still staying compliant?
Yeah, good or very broad question, but yeah, typically they will come to us. looking after a provider that they can cover the countries where they want to launch or they want to expand. They have many questions, so maybe it'll be, okay, when I will have the money, what's the settlement time, how do we solve the reporting, can you be able to send me a template that I can consume and my system could be consumed, are these payments are instant, not, what about installments, do I control the rate, you control the rate, of course FX comes a lot, okay, of course acquires, mainly APMs on alternative emerging markets, you get paid quite quick, like probably T+1, T+2. Then when it comes for, if you look at LATAM or some acquirers in Africa, it could take a while. Like if you go to Brazil, it will take 30 days for us to get the money from the acquirer. Mexico is quite quick, Chile is like 7 days. So we need to make sure we send the settlements. And also we are PSP, so we are not running any exposure. We don't want to speculate with effects, so we want to exchange those funds into hard currency, making sure those are delivered to the merchant in a timely manner. Yeah, and then they focus mainly, but they look at us as really as an advisor because we have offices in 46 countries. In some countries, we have 7 acquirers, 6 acquirers, 8 sometimes. So we want to make sure we run smoothly and we control the flow end to end. So it's not that we have like multiple.
So the answer to dealing with the complexity is you hire dLocal.
Yeah,
and
yeah, it's not trying to do a same point, but typically if they connect to a PSP like dLocal, they will be covering mainly the most important country in the south of the globe, and we will take care of everything.
You cover
Otherwise,
compliance, you cover FX.
yeah.
And
You said taxes before, which I think is a very good point.
yeah.
So we are perceived, or typically we say, okay, we work under the merchant of record model, but the merchant of record model could be interpreted differently by one type of company or another. So some people say, okay, you're the merchant of record, great, but
So for the audience, can you just
yeah,
define,
I'm trying to get to a
define what
point.
you mean by merchant of record?
Yeah, I'm trying to get to a point. It's quite interesting. So, what's the difference? So you said taxes. So some people would expect, okay, pay the taxes on my behalf. That happens a lot with digital companies like video gaming. That the concept of merchant of record is, okay, you are kind of a reseller for me. You collect on my behalf. You pay the taxes for me. But maybe others like retail companies, they can pay the taxes by themselves, even though having a local entity there, I'm only liable of collecting the payments and selling out. That's a very good difference. Typically, we don't collect the taxes, not because we don't want. If we can do it, we will be like more than pleased to do it for our merchants, but we are not allowed from a compliance perspective.
Excellent. Okay.
Sorry, I want to finish with that, but I think it's very important.
That's really helpful. So if I can turn to Adam, I mean, clearly one option, dLocal offer this full stack service. One alternative is orchestration. So if you just talk us through how orchestration works and whether that's another product domain that might be interesting to merchants engaged with this complex cross-border activity.
Sure. So I think orchestration, to differentiate from what dLocal is doing, sits at a different level of the payment stack for companies, right? It's a purely technical discipline, and it's geared at allowing clients that have often a geographic-driven complexity in their payment stack to deal with that complexity at scale, right? One of the things we saw in Agustin's presentation now, and dLocal being one of the leading PSPs in this space, is that their coverage extends to 40 countries or 40 markets, you call them in the presentation. Now there's 195 countries around about worldwide, and there's companies that operate at this scale, right? And that need providers like dLocal in emerging markets perhaps, but different providers again in European markets, in North American markets, potentially in Asian markets as well. And what orchestration is seeking to do is to at least consolidate on a technical level, to separate concerns within payments, to unbundle, if you will, the technical rails from the underlying financial services that are provided by often local specialists, such as dLocal and others in the target markets that these companies are in.
And can you give us a sense of what scale or complexity of merchants needs to be before orchestration is interesting for them?
I don't think that there is a clear answer to that, to be honest, right? Because we see companies that have a very, very high degree of complexity. One of our clients is live with us in 130 countries, processing by 43 different PSPs. So they have obviously an insane level of complexity to manage, right? And that extends to every process within the payments lifecycle. If you think about, the manual work that would normally go to the treasury and back office teams of these companies when it comes to reconciling payments with their ERP systems, right? There's a lot of potential to help there. But I think this kind of scale, this kind of complexity is not necessarily the only driver, right? We see very successful implementations of orchestration at a much smaller scale, right? It can depend on the specific vertical that I am operating in and the view that perhaps the payments industry at large takes on this vertical. So we had a panel earlier on where my esteemed colleague from Bridge mentioned they work in gambling, iGaming, typically regarded as a more high-risk sector of payments. Well, that's one where I would say orchestration has a clear business case for it, even at a much lower level of complexity, where it's imperative to work with multiple processors at any given time for a variety of reasons.
So, Blessed, I mean, you don't get much more global or complicated than Google. So how do you manage this complexity, the taxes and everything else?
So from a Google perspective, right, that's a very interesting question, right? Because
you do pay tax, don't you?
I would want to say we're probably one of the highest taxpayers, but yeah, we can let that go. No, so essentially what we've done, right, is we've built our own orchestration layer, right? Google is very, Google prides itself in building stuff, right? And fundamentally, you can see why that ideology comes in. To the ground level, we are a technology company, right? If there is a problem, which eXoPay is doing a great job, Bridge is doing a great job at doing this for like other merchants who cannot develop the orchestration layer themselves. Google, I'll give a story, right? I've always been in payments, right? From engineering down to doing strategy, for payments. So my first week at Google, right, I joined and they pull up a dashboard. I would withhold myself from saying the name of the dashboard. And I see the level of complexity that the system's doing. And the first thing I tell the guy who's showing me is like, I know payment companies, massive payment companies, who are trying to build this, and they failed at least 5 times, right? So it's like the sheer level of engineering, whether it's from tax compliance, right? Because again, where I see it is the platform, the payment platform that processes all of Google's transaction, whether that's from e-invoicing, which is a massive and a big deal for a global company like Google. There are regulations that require you to be compliant in how you issue invoice to businesses, right? Whether that's e-invoicing, whether that's taxes, whether that's actual payment collection, chargeback reconciliation, we built an entire orchestration layer that powers Google internally. Yes, and to add also, right, in places or in areas where we've not done a bespoke, right, build for ourselves, we find partners that can do that efficiently for us. So yeah.
And do you tend to hire engineers from the payment industry, or you take your general purpose engineers and teach them payments?
I would say payment expertise is needed, right? It's essential. But I think far from just payment expertise itself, the most important thing is how problems are approached and how they are solved, right? I have a quote, right, which is like, if you give an argument to an intelligent person, whether you tell them to support or oppose, provided they're intelligent, they would have points, right? So if you tell me to support a very ridiculous cause, in my definition of ridiculous, because I'm smart enough, I would have intelligent ideas to support that cause, right? So that's the view which it comes from. It's like, what's these individuals' approach to solve problems, right? Yes, there is an interesting twist. If they have a payment expertise, they can view it, they can think of reconciliation. You don't have to define what chargeback is to them, right? But the most important thing is how exactly do they approach problems and what's their path to solutions.
Okay. So let's move the discussion on to talk about payment infrastructure and account-to-account and so on. So, Augustin, you showed lots of examples of domestic account-to-account payment methods doing quite well all over the world. My understanding is right now they're mainly islands. So, question to Paul is, how is domestic payment infrastructure modernization relevant for cross-border payments?
Yeah, it's a good question. Yeah, so any cross-border payment's got what we tend to call a first mile and a last mile. So where it originates and where it ends up, different jurisdictions, definition of cross-border payment. So it's going to need to use some kind of domestic infrastructure in both those miles. So improving those bits of infrastructure is part of the solution to solving cross-border payments. It's not the whole solution, but it's an important part of it. So central banks worldwide, including here with the Bank of England, are working on improving infrastructure. For our part, we introduced a new RTGS platform back in April, RT2. That's been designed to be resilient, to be a platform for innovation so that the people to my right here and everyone else in the room has plenty of opportunity to develop new services. Now, RT2 operates in our wholesale space. What you've been describing here is mostly retail, and that's what the interest of this conference is mostly around. And it's no secret that retail payments development in the UK is a bit behind wholesale development, and frankly behind some other jurisdictions as well. We've slipped behind. But there is now a vehicle for improving upon that, catalysed by the government's national payments vision. That's now in the implementation stage, and significantly, the new Retail Payments Infrastructure Board had its very first meeting this morning. So there is now a way forward. It will take time to deliver, but crucially, we now have the tools in place to advance the retail infrastructure in the UK and catch up with the rest of the world. The question focused on what it can help for cross-border payments. So just doing up the infrastructure domestically isn't enough. These infrastructures also need to be able to talk to one another. So interoperability is the buzzword in this case. And interoperability means a lot of different things to a lot of different people. But perhaps the single most important thing it can do is ensure that payment systems speak the same language. So ISO 20022, I'm sure you've all heard the slang, the jargon. That's really important, that every system uses a consistent implementation of ISO, or as many systems as possible can do so. And again, this is an area where the UK retail infrastructure needs to catch up. So that's in train. There's lots of work still to do, but upgrading domestic infrastructure is a key part of the problem here, key part of the solution to the problem, I should say.
So if I could put you on the spot,
Yeah, of course.
when can I expect to be able to make a faster payment to SEPA Instant? Or a faster
long's a
payment
piece of
to
string?
FedNow?
How long's a piece of string? I don't want to put a date on it, but I think it will be less than 5 years.
Less than 5 years.
That would be my best guess, sitting here now. There's a lot of hurdles to pass.
So,
to get
Tara,
there.
how exciting is that to you and your customers?
Five years is a long time in payments.
I know.
I would say.
So if that's so far away, not to bother. But I mean, if we could do instant payments to SEPA, to SEPA Instant, how exciting would that be?
I think any cheaper, faster, easier way of moving money across border, the sooner it comes, the better it is for any merchant in the industry. Right? But that can also take many different forms. Right? What is happening in the account-to-account space, even across larger regions like Europe, is one thing. I think there's other technologies, other systems that are evolving within payments at the moment that are kind of, all competing for attentions. The systems that we have built decades ago, things like SWIFT, are being challenged in the market today. And I think the jury is still out. Can anyone predict the future state 5 years from now? In my mind, having been in technology for almost 30 years now, 5 years is a really, really long horizon. Right? I think most people would be off with any predictions 24 months into the future.
Very well said.
Okay, so less than 5 years for it, so I can make a bank transfer to a SEPA account on the continent, maybe. What about the digital pound, the digital euro? How excited should we be about those?
I think we'll leave that to Paul. Because he's the one from the Bank of England. He's the one.
How
that can give us-
excited should you be about digital pound, Paul?
So let me take digital euro first. So I can't speak for the ECB and the European authorities, so you can read all you like about what their stance is. You know, clearly got a very public ambition to reduce dependence on card schemes. Digital pound, so important to mention three things. So one is it's a joint project between the bank and the Treasury. So it's a government and central bank initiative, and there's a very clear commitment that nothing will go forward without legislative action by Parliament. So it would be very much a democratic decision. It's not a technocratic one for the central bank. Second is that no decision's been taken. You've been very clear on that throughout, is that they're doing a lot of exploratory work, both the bank and the Treasury, but no final decision taken. And then third is where we are at the moment. So work is currently focused, internal work within the Bank of England and the Treasury is focused on the so-called blueprint. What might a digital pound look like, which is very important for industry to know because you would want to interoperate with it. That's due for publication sometime in 2026. But there is another important part of the assessment of whether to go ahead with the digital pound. It's not just the functional bit, it's also, to what Adam's just said, how does the landscape evolve in the meantime? Where is the use case? Is it needed? Does it form up an important part of either a commercial proposition or a public policy proposition? And as Adam's exactly said, in the space of a few months, that can really change. So keeping track of the environment and what that means for the case for and against digital pound is very much at the forefront of our thinking. So I appreciate I can't answer the question directly. How excited should we be? Because it's a conditional answer to what I say.
I would add to this point that, I mean, looking at the debate across Europe for digital currencies, right, you notice that there are very different regional interpretations. Right? If you look in the more in the countries that are known for being more of the party poopers around data privacy and so on, so the German-speaking part of Europe, there is a very high level of mistrust around these kind of initiatives because people feel like the introduction of a digital currency is the first step to a total erosion of privacy. And I mean, I get that from a certain perspective. If you know, I have a digital currency that is tied to a wallet that uniquely identifies me, any transaction that I perform with this digital currency for whatever good or service will be fully traceable back to my identity, right? So yes, on the good side, maybe it will prevent crime, money laundering, lots of other naughty stuff. But what if I want to do something as simple as buying contraception in a pharmacy? Is that something that needs to be directly tied to my identity? That's something potentially has to be able to look into, or you know, that this kind of profile should become suddenly digitally accessible. I think there is a worthwhile discussion to be had, and I think in different countries in the European Union, it's really focusing on different aspects of this of these central bank digital currencies. So yeah, 2 years until adoption, I think is it's very optimistic, because until those are resolved, I think a lot of water under the bridge.
And as far as cross-border is concerned, my understanding with the digital euro is I need to have a separate bank account in order to have a digital euro. So as a Brit living in London, I won't have access to digital euro. So when I go to the continent, I'll have to still use my MasterCard.
I will speak for all Europeans and say British people are welcome back, you know, with open arms.
Would be delighted, but unfortunately that's outside my gift. But in terms of cross-border then, would it be the same thing with the digital pounds? So would you have to be a Brit with a British bank account to have a digital pound?
Yeah, I mean, that's a key design element, is the ability to hold digital pound outside the UK, and whether that would be permitted at all, or subject to what limits and under what conditions could you hold it in a wallet, non-UK wallet, a digital pound.
So these
That's
digital
an open
currencies
design.
are designed not to have any relevance to cross-border transactions at all.
I wouldn't go support it that way, because I think it comes back to interoperability. If you can interoperate and make a transaction that involves you defunding a digital pound wallet, for example, and fund it in such that it's exchanged into a digital euro wallet, then you have facilitated in some way a cross-border payment that way. Now, it remains to be seen whether that's any better than the current arrangements for doing so through bank accounts, like cross-border A2A or similar. But in principle, there is a cross-border element to CBDC, just as there is to all digital money, including privately issued digital money.
So with that in mind, let's move the discussion on to digital currencies that are designed for cross-border trade.
Yep.
So as far as I know, no one today has talked about stable coins. And I think we have to have a conversation on this panel about stable coins.
Yep.
So, panelists, are your businesses currently using them? If so, how and where do you see the future going? And who wants to go first?
Yeah. Oh, no, I think I would answer the second part of the question rather than the first, right? Which is where do we see the future goes,
Yes.
right? I think ultimately, right?
So before we do it, so as a global merchant,
Yeah.
are you currently accepting stablecoin payments in any jurisdiction?
No.
Okay.
At the moment, no. Right. As a form of payment acceptance, not at the moment. Right. That could change. It could have changed as we're speaking now. Who knows? But one of the areas where we see it, right, or potentially where I see it, is in treasury and liquidity management. Right. I think broadly we've barely seen massive adoption of stablecoin for retail payments at the moment. Right. And I don't think we might see it in a while. Right. But in terms of like treasury and liquidity management, in terms of how quickly can you move money across borders from an enterprise perspective, stable coins play a critical role there. And I think Augusta could definitely tell us more about what DLOCO does with stable coins. Yeah.
So turning to Augustine and Adam, question, are any of your customers asking to be able to accept stable coins? And second question is, any of them asking to be settled in stable coins?
Yeah, okay. Yeah, it's a very good question. Just want to split that in two. We have quite a lot of requests for specific like use cases. Like when the local does not only like collections like in emerging market, but also with its bars. So we put money into emerging markets in local currency. So when you have cases like payroll or remittances, many of the remittance company, because they are moving the money even faster, so they want, let's say, I don't know, I'm at WorldRemit or Western Union, whatever, imagine whatever you want. I want to get that confirmation like instantly that that payment has been through. So we are asked, okay, for remittance, can I fund you in stable coins? So the answer is yes, they can fund us in stable coins. But when we go to the other side of the country, let's say a retail company, whatever, we are not seeing like a demand for stable coins. So merchants are not coming up to us and say, hey, I really want to have my check on like to receive like OTC or OCD. I mean, it's not there. And in the short run, same as Bless was saying, I don't see it coming because ultimately, I mean, the end user or the customer needs to be moved in order to ask for that. Why do we have that? Maybe they have a wallet that they keep stable coins because they live, I don't know, in an emerging market that the currency fluctuates like this, so it's a good way of keeping safe that volatility. But we are not on that side, so merchants, it's not that they're offering that. Yes, on payouts and also in treasury. I'm sure that many of the companies here, probably some, they use in treasury. We use in treasury to move money like a couple of seconds. But from a traditional merchant or e-commerce perspective, we are not seeing a demand for having stable coins as another payment.
So I think over the last 12 months, the total number of transactions we processed for B2C merchants using stable coins was exactly 0.
And that lines up with what I'm hearing from other global merchants. So mainly use cases around treasury management and so on. So if I could ask Paul, the Americans are very keen on moving global trade onto what is essentially tokenized US Treasury bills.
Yeah.
Does that worry the Bank of England at all?
I think I prefer to think about what we're doing domestically rather than what our American colleagues are doing. I think we look at stable coins with a mixture of excitement and trepidation. Really, it's kind of both at the same time. Excitement, and it offers some great opportunities, potentially. Yeah, so the people in this room are better placed to judge on how that potential can be turned into commercial reality and actually applicability for users. And it's really revealing that actually demand out there at the moment is pretty latent. It's not there yet. But there are opportunities, and cross-border payments is one of the most promising use cases, at least on paper. So there's plenty of reasons to be optimistic that there's some real efficiencies to unlock here, and having stablecoins as part of what we sometimes call a multi-money system might actually make that system work better. At the same time, if stablecoins are used for payment on a significant scale, then they then take on all the characteristics of money, and money is what makes the world go round, essentially. And you ensuring that anything that purports to be and acts as money is robust, resilient, protects the user appropriately is really vital. So that's where the trepidation comes in. You need to make sure that there's a proper regulatory framework around these instruments, stablecoins, and their issuers.
But is there any, sorry, I want to press you on this one. Is there any concern if these instruments all are dollar denominated rather than euro or sterling?
So the bank will be introducing, or consulting on, I should say, a regulatory regime for stablecoins in the UK in the coming weeks. Part of that regime is understanding how cross-border provision of stablecoins could work. So could a dollar-denominated stablecoin issued in the US, issued by a US issuer, could that be used in the UK? And that is an active piece of policy development, is what terms could that happen? And that goes both ways. Under what terms could a non-US stablecoin be issued into the US? So at the risk of drifting into technical terms, this is what's been known as equivalence arrangements in other settings. Could those be used for stablecoin? Far too early to know exactly how that's going to shape up, but it's a very relevant policy consideration for the regulatory framework as a whole. It's something we're very experienced with dealing with traditional payment instruments. We have regimes for cross-border access in that space. We'll now need to develop those into suitable frameworks for stablecoin that preserve the resilience of these issues, make sure that a stablecoin holder can convert that claim into fiat money on demand seamlessly, but also do so in a way that allows for innovation.
So I'm happy to take any questions if anyone's got any. Oh,
One question. I'm sorry, Paul, because you're from Bank of England, so there's lots of questions, I'm sure, in the room, but nothing that is contentious or anything. But it's more about the national payments vision.
Yep.
There's lots of innovation coming through, like the core pillars of it: competition, innovation, and resilience.
Yep.
When it comes to innovation, obviously us innovators have been in, we're used to acting at pace, but obviously you've got to think about resilience and national security.
Yep.
How is that being factored in, the pace of change that's happening at the moment?
It's a good question. So, importantly, consultation and collaboration between public and private is vital. So I referred to the Retail Payments Infrastructure Board a little earlier, and I meant first time today. So that's chaired by the Bank of England, but it comprises industry representatives, so it's a majority industry group. Yeah. And it's intended to bring together public policy priorities, but also commercial imperatives and the innovation mindset into what does the future of the retail payments infrastructure look like. So combining those public and private perspectives is a key to making sure that we don't... let me digress a minute. There are some jurisdictions that the central bank calls the shots. We don't want to be in that space. We want to listen to what industry's got to say and develop the system in a way that provides that space for innovation whilst keeping in mind the resilience principles that must underpin anything that involves moving money on systemic scale. Hope that answers your question.
It does. One other quick question is, do you think that the UK has an opportunity to be on the world stage with what we do with the national payments vision, if we get
absolutely.
it right?
Absolutely. Yeah. So the UK historically has been at the forefront, or in the past has been at the forefront of retail payments innovation. Faster payments is the best example of that. First of its kind in 2007 or 8. We have, frankly, slipped a bit behind the pack in the last 5-10 years. But now there's an opportunity to springboard and go ahead. And that's what we've done in the wholesale space. So RTGS2, RT2 is at the forefront of wholesale infrastructure worldwide. having been behind previously. So we've springboarded.
So if I could bring the rest of the panel in for a second. So Augustine, going back to your chart of all these new account-to-account domestic instant payment systems around the world, is the British hope to become a world leader just another imperial delusion? I mean, how excited are you guys by the national payment vision?
Yeah, I think we don't know what's going to go on there. As Adam was saying, like he was mentioning today, 5 years, like whatever they develop here in England, which for sure is going to be quite broad. Like in emerging markets, the level of technology and innovation that they're driving, like into Latam and many others, is crazy. What I think by the ambition of those companies that they're growing, and if you think of even in Brazil, Nubank, all the cars that we process, that is the average, 63% of the cars that we are processing are from Nubank. They have NuPay as well. They're going crazy aggressive. You have UPI in India. Many countries from Europe are accepting UPI. Yeah. So the ambitions of those monsters, like these two, for instance, but there will be more, they will get to a point that they will touch each other. And they will start, all of them want to conquer the world. Look at Revolut. It's not like a payment itself, it's a wallet. But they bought a bank in Argentina, a bank like that nobody remembers, but has a license. Like that. So they make a bet there. So we'll get to a point, I think, in, I don't know, maybe 2 years, 3 years, that we will see all those forces, how they compete each other. There will be negotiations, there will be trade-offs, but yeah, there was some that maybe they will be global.
So this will be resolved in the marketplace rather than by regulation?
I don't know. If I can jump in here, I think we just briefly touched on SWIFT before, right? I mean, payments are, of course, the jugular of commerce, if you will, and trade. So there is a lot of like private sector interest at stake, but we shouldn't forget that they are also an instrument of political control and political will. And certainly we've seen this over the last years, decades, in how, for instance, SWIFT has been used for political purposes, for instance, in enforcing sanctions on specific banks, right? So I don't think that any of these new giants that are emerging will be free from these pressures, and certainly not the moment they start touching each other, as Agustin said, which is a very sexy way of putting it, by the way. No, I think the regulators will continue to have a strong role to play, or a say in how these systems operate and interact.
Yeah, if I just chip in on that, if I may. We've been talking in the international regulatory community about cross-border payments for 5 years or more now. When the work programme to improve cross-border payments was first conceived in 2020, compare the world then to the world now, geopolitically it's an incredibly different environment, an incredibly more difficult environment for lots of reasons. So the reality of geopolitics touching payments is inescapable. SWIFT has been the crucible of that thus far, but it won't be the only crucible going forward.
So we're almost at a close, so I will ask the panelists one last question. So in one sentence only, what is the single change that you'd like to make in cross-border payments to make them seamless by 2030? Start with Blessed. Single change to make payments seamless by 2030.
That's, I would say we want to see a better level of transparency across board, right? So which data points available to customers or available to businesses to be able to make the most optimal decision as to how they want to route their cross-border transactions.
Augustine, one sentence.
We want to be as seamless on integrate. Many merchants typically have issues when integrating, so adding AI to make it seamless on any integration that they make.
So integrating what with what?
With MCP, like it's not Robert, but like actually we have many engineers, but to make, if you speak to many merchants, typically the challenge is, okay, I have this screen, or I don't have enough resources on my pipeline to make seamless to integrate to us, so they can cover all the South markets.
Adam, one change to make payments seamless by 2030?
I'm going to be the contrarian. I hope global payments will never be seamless. because this complexity is, well, the oxygen of my employer at the moment.
Orchestration, yeah.
But I would also say that it's, it creates room for competition. And the day we have one form of payment that is accepted across the world in the same way everywhere, I think we will have other problems by then.
It's true, in complexity there is margin.
Yep.
Yeah, so there's value in having a complex system because we can all make a living making it simple, right? Paul, one change.
One change, digital IDs.
Yeah.
They're a vital enabler. If they could be made globally interoperable, that would be a massive game changer.
Wonderful. Well, thank you all for listening, and thanks to the panel.
Pleasure.